Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. We're fastly approaching the 990 filing deadline for calendar year-end organizations. So I want to talk about a few 990 compliance tips for filing. Now, the 990 itself is a 12-page document, and there's schedules A to N and of course Schedule O that have to be attached within certain situations. So it's a huge document, takes hours to complete. In addition to that, you might have to file a 990T for any UBIT or unrelated business income. And so I just wanted to talk today about a few tips and tricks for filing the 990. I'm just going to go through it section by section, and then I'm going to cover a couple of schedules because, this is really a huge topic. And so we're going to hit the highlights. So the first section I want to talk about is your organizational information. Make sure it matches your IRS determination letter. Just this week, I found an organization that there's a transposition error in the name of the organization on the IRS website. So it may or may not be something that a person would pick up on, but the computer probably will. So just make sure that what you're putting on the return is what's on the determination letter. And I am working with that organization to get that transposition error fixed. The next big section talks about our program services. I want to make sure that you are listing your expenses, and the total for all your program services need to match the statement of financial expenses, which is the schedule later in the 990 on that program column. So you need to make sure that that total from your program accomplishments equals the expenses from the statement of functional expenses. So this means that any overhead allocations that you're doing for your statement of functional expenses need to be included in the expenses reported here in the program service accomplishments. Now, in that expenses, we're also going to include any grants that were given out, but the document wants us to report those separately as well. So make sure those grant disbursements are in both of those numbers, the total expenses and the grants. And then the revenue for program service accomplishments is going to be the revenue that's directly derived from that program. It is going to match what we have on our statement of revenue on line 2, where we list out our different types of revenues. Now, the next section of the 990 is our checklist, and there's a ton of them. There's lots of code sections to understand. They're easily accessible on Google, on the IRS website. Sometimes it's hard and you start bouncing around doing that research. So if you have somebody who's knowledgeable with what those code sections mean and can explain it in just plain English, that's very helpful. This section, basically, if you answer yes to a question, you're going to have an additional attachment. It could be Schedule B, it could be Schedule A, it could be, any of these other schedules that A to N or O that can be attached. So that's basically what that section is for. Then we have it within the checklist, other IRS filings. Did you do your 1099s, your W-2s? Do you have a 990T due? You have tax shelters, the related forms that go along with that. Did you do your donor acknowledgements properly? And so on and so forth. Then the next section is about governance and disclosures. Basically, how many people are on your board of directors? Are they related to each other, either by family or by business? The IRS wants to know how many of those are related. Were there any changes in your organizational documents? There's a whole section on policies. What written policies do you have or do you not have? And then there's a section on public disclosure information. How are you complying with your public disclosure requirements? The next big section of the 990 talks about compensation of officers and directors. And I want to make sure that you understand, because sometimes there's a lot of confusion. This is during the period that this 990 covers. So if we're talking about calendar year 2023, we need to know every officer and director for 2023. Now, if your board changed over or any position changed over, you list everybody, the ones that are no longer on there and the ones that came on board. So that's one point that's usually confusing for people. Another is that when we check off what position they are in, some board members are going to be in more than one column. For example, we may have an officer who's also a key employee. So you're going to check the box for both of those items for that individual. And then the reportable compensation, the IRS wants us to put their W-2 salaries on this form. Now, if you're a fiscal year end, this may not match what you report on your statement of functional expenses. Or if you're accrual basis reporting, it may not match what you put on your statement of functional expenses because the W-2 is calendar year, it's cash basis, and there are some income that is not on your box 2 of the W-2. So it seems counterintuitive that those numbers wouldn't match, but that's the way the IRS wants it reported. Then the next big section on the 990 is the statement of revenue. Now, the tricky part here is to make sure we're getting things in the right column. Of course, report our total revenue, and then the next column is revenue that's related to our exempt purpose. And that's going to be all of our program service revenue and accomplishments and fundraising, things like that. Then we have a column for unrelated. Now, this is going to be things that we're going to need to file the 990T for. And this is going to be advertising income, or if you're running a business that supports the organization's mission, anything that's considered unrelated business income, that's going to go in that unrelated column. And then finally is our excluded under section 512 and 514. These are income that the IRS is not going to call unrelated business income, but it's not directly related to the program services. We're talking about things like interest income, other investment income, royalties. Section 512 through 514 lists these individually. And then on the statement of revenue, we have some things that are reported at net and not gross. And these are going to be things like, do you have rental income? You know, do you provide housing where you charge some rent based on a sliding scale? So that rental income is going to be reported at net. Sales of assets that are not inventory. Maybe you disposed of some fixed assets. Maybe you disposed of some stock that was donated. Maybe you disposed of some other types of assets that are not inventory. Those get reported net. And then also our fundraising events. Those are reported net. And if we have a significant portion of them, of course, we have the Schedule G. So it's got to match the Schedule G. The next section is the statement of functional expenses. And like I said, we're going to be allocating overhead among program, admin, and fundraising. So we want to make sure that that gets done before we fill out this form. And then the other thing is anything that was on the statement of revenue as where we reported income at net, for example, rental income. Any expenses related to those rentals are going on the revenue sheet and are not going on the statement of functional expenses. So your total expense from your statement of activities may not match the total of this form. And that's okay. It's just the way the reporting works. We've got a reconciliation page coming up. Anyway, you're going to want to exclude those expenses that were netted against revenue. And each line item, some of them are very specific about what goes on the line item, especially in fundraising. A great example of something just you wouldn't even think of is advertising professionals. Go on line 12 with advertising expense and not line 11 with professional fees. But that's just the instructions and the way that the IRS wants it reported. The next section is our balance sheet, our reconciliation of net assets, and our financial reporting. Now, this is where you're going to have your balance sheet And you're going to, one thing that we do not report on the 990 is unrealized gains and losses. So your balance sheet is going to have to exclude the value of the unrealized gains and losses. Your income is not going to include it. So here is where we reconcile those items that are on the 990 and not on your internal financial statements to show that they do agree. And then there's all of the other schedules, and I'm just going to talk about the top four for me, especially as it relates to public charity. And the first one is Schedule A for public charities. Now, this is your public charity test. If you've only been in operation for less than 5 years, you have to fill out this form, but you don't have to do the calculation of the percentage, the 33 1/3% that you have to have at least that much from public source. Your donations have to be 33 1/3% from public sources versus your entire income. So that's what this form does. If you're less than 5 years, you're going to fill out the form and then you're going to stop before we do the public charity test calculation. Within that first 5 years, you don't have to pass that test. But from 5 years and beyond, you do. And if you don't pass the 33 1/3% test, there is another 10% facts and circumstances test. So those two tests there that we can work at. So really during the year, we want to be looking at this test. Are we going to be receiving a huge grant? Is it from public sources? We may be receiving a grant from another public charity, from a government versus a private foundation. And how is that going to affect our income and our public charities test? The other thing I want to talk about is unusual grants. If there's a grant that's unusual, for example, a lot of the grants during COVID were very unusual. Those could be excluded from our income when it comes to the public charities test. We could deduct those grants from both the numerator and the denominator for the test. So keep in mind that a lot of people don't realize that there's that exclusion for unusual grants. And then we have to talk about disqualified persons. Disqualified persons are anybody who donates generally more than 2% of our gross revenue over 5 years. So that's a pretty big number for some organizations. For some smaller organizations, that's a pretty small number. But what we're looking for is persons who can influence the organization. We're not going to be considering those as public donations, even though it might come from an individual. And the thing to know about disqualified persons is that include family members or other related parties. The Schedule B, this is where we list our major donors and our grantors. Now, the big thing I want to say about this is not part of your public disclosure requirements. So it does have to be filed with the IRS, but when you're giving out copies of your 990 as part of your public disclosure requirements, do not include Schedule B. And then I want to talk about Schedule G for fundraising events. This has to be filled out. It's more detailed information about the types of income you're receiving and the types of expenses you're dispersing. That it goes into a lot more detail than what we report on Schedule A. And it has to be filled out. There's one of three requirements. Did you spend $15,000 or more on a professional fundraiser as in your expenses? If you did, then you have to fill out Schedule G. Did you bring in more than $15,000 of gross event income? If you did, you have to fill out Schedule G. And did you have more than $15,000 of gaming income? And of course, if you did, you have to fill out Schedule G. So it's not just how much did you bring in from event, but it could be gaming income or the expense on the expense side for a professional fundraiser. Not a staff person, not a consultant, but a professional fundraiser. And then lastly, I want to talk about Schedule O. Schedule O is my favorite schedule. This is the narrative where you get to explain things about your organization, explain things about how you answer questions, put more detail as far as your mission statement and your program service accomplishments. Really brag about your organization, show what you did this year in comparison to last year, explain how those funds were used and what you were able to do. It is open-ended. This is part of your public disclosure documentation, and donors and watch organizations are reading these. So really pay attention to what's going on here and brag about your organization. And that's just the highlights of the 990. So really, I want to say, pay close attention to the instructions. If you're trying to do this on your own, really pay close attention to the instructions. But it's critical that we get this right. Not only the filing of this form help you maintain your tax exempt status, but it communicates to your donors the value that you bring to your community. I hope this was helpful for you. And if you have any questions on this or other topics, please put something in the comments, and we always appreciate your likes. And thank you for joining me today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.